We've got Tim Ord on the line. Tim, how are you?
Good, good. Thanks for having me on again.
Pleasure.
So,
Tim, can just before we do anything else, can you just tell folks how they can reach you and about your newsletter?
all right, we've been in the Oracle started back in 1992, so been doing it for a while. I've been in the equity market since 1977. Um, Been in the top 10 at Timer Digest numerous times. But my email is tim at ord-oracle.com. Got a website at ord-oracle.com. So been there,
Good.
done that. So, okay. Want to move on to the charts?
Sure. Let's absolutely start immediately. What
All
have
right.
you got for us?
All right. I assume this chart's up, but this is
Yes, it
the
is.
daily Oh, well, good. Okay. This is the daily SPY. I want to point out I got a couple of shaded areas here. One, the shaded area here, which basically defines this period in here. What I want to point out is there's a lot of ticks and trend readings in bullish levels in that area. Back in that would have been June. That's a June low. Trend readings below 1.2 are bullish. Tick readings, or actually trend readings above 1.2 are bullish because it shows panic in the market. And the tick readings on the close below minus 200 show panic. And panic only forms at bottoms. So anyhow, that picked out that bottom. And I want to point out what's going on right now. If you notice, basically between 6:30 to 6:40 on the SPY, we got quite a few different trend and tick closes right in this region here. So this actually is a support area between 640 and 6 in that vicinity, right in this vicinity here. And the market did pop above the previous high. This is July 31st right here. And if you notice, we had volume on that day of 103 million shares. You popped above it on this day right here on 65 million shares. Normally, when you break a previous high, the volume should be at least equal. And if it's 10% or lighter, which this one was, a lot of times they're false breakout. Not always, but it's kind of a warning sign that if you got to have what I call an SOS, a sign of strength through the previous highs. And we didn't have that on this would be Tuesday. Today's Thursday. This would be Tuesday. We didn't have a sign of strength through the previous highs. So we kind of just fumbled up here. Yesterday's volume dropped a little bit compared to Tuesday's volume. And I don't know how volume's going to be today, but it'll probably be lighter than probably yesterday. And we may fall back into this trading range. This is where that panic formed, and I'm thinking this area is going to be the next area for a buy signal. Let's wait and see. Don't know, but that's what it's starting to look like. This is a weekly chart. We had actually, this is a bearish engulfing pattern on the weekly time frame right there. In other words, it engulfed the previous week, and we're up retesting that high right now. And most likely, I did this earlier today, and I don't think volume is going to get anywhere near what the volume was 2 weeks ago. So I'm thinking we're going to consolidate here a little bit. This one says we can get it back down to 620. So we'll see how that works out. But I'm not long yet. I am bullish on the bigger time frames, but on short-term time frames, we're not seeing actually ideal situations here. I kind of do this, the SPX tilt ratio. This is a daily. Last time I showed this on the show, I looked at it weekly.
Can I just interrupt for a second? When you say S&P tilt, the T, it means the TLT. You've abbreviated and you're so used to saying it, but for anybody new to listening to you, I just wanted to clarify, that's the TLT.
Yeah, it's the SPX tilt ratio. I'm sorry. But, I pay attention to that. So that's the equity market against the bond market. So it's a ratio, and it shows you how those compare to each other. A lot of times this ratio leads the SPX, and that's why I want to point out here. So this is the ratio going in. Basically, this is a February high. The ratio is moving lower. In general, the S&P was making higher. You got the April decline. You got something similar going on right here. You're not making new highs on the SPX tilt ratio, but the S&P modestly did make you can see a little bit better on the side window here.
Right.
You got a little divergence going on. So you got a couple of things not ideal here. But this is the summer doldrums. You get all this weird stuff going on. And so just when you think it's safe to get long, the market kind of drifts back at you. Just when you think you found a bottom, the market still drifts lower. So this is not ideal time to trade heavily either direction. I think that time comes in September, October. But of all the quarters of the year, this is the weakest quarter. So I kind of tread lightly in this time frame. And so it's is it real bearish? No. If you go back to the first chart here, you don't really have a lot of downside, but you got a lot of panic in this region, 630 to 640 range. And I'm thinking that worst case, we may get 620. I don't think that's going to be the case because I think it's going to be hard to get through the 630 range. But that's how I'm seeing it. Nothing real significant to the downside, but I'm looking for a long trade to the upside. How long will that trade be the upside? I don't know, maybe a couple, 3 weeks to the upside, then probably more consolidation. I just think you're going to read in. I think we're heading into kind of a choppy market where if this high doesn't go, at some point we'll probably go back down to 620, then try to rally again. But I think the big part of the rally starts later this year, September, October, and that's the one to lean on. This one is just probably a trade for a bounce, maybe 3 to 5%. I'm thinking nothing real huge to the upside, but I'm going to take the trade if it lines up, and we'll see if we get the pullback or not. It's going to happen. It's going to start this week and probably end next week. So it's just not showing any energy to the upside here. So I'm just being a little bit of patience. And so that's that. The next segment, we'll be talking about the gold market. And actually, I think both markets are kind of trading together, starting to look like. So we'll cover that in the next segment.
I just had a quick question. Someone wants to know, ask Tim to confirm the SPX TLT is a weekly data point.
Is it weekly?
Is it weekly?
No, this was a daily. Yeah, this was a daily.
That is a daily, yes. Okay. He thought it should be, but he just wanted to ask. Okay. We'll be back with Tim in a moment, folks. The Dow is down 1, S&P's up 3. Hi, folks. We're back. Basil Chapman sitting in for Tommy O'Brien, and my show usually is the Tiger Technicians Hour, 10 o'clock to 11 each market day, and my service is the opening call newsletter, and we're on with Tim Ord. We're looking at, I think we're going to go to the GDX. Is that correct?
Yeah, we're looking at the GDX. This is the bottom window is the GDX daily ratio. It goes back to 1920 or 2021. This is the daily GDX right here, and I just put an RSI on the GDX daily ratio, which is basically the RSI is for the ratio. So anyhow, I measured the volatility of the ratio, and I marked all the times in red lines, the times when the RSI got above 70. When I did this earlier today, it was 71.49. We had some similar reading on Tuesday at my last. I think I showed this chart last time on Tuesday also. So nothing really happened so far. We just stuck up here. But I did notice that, a lot of times they come in twos. Kind of a double top here. I don't know if this time it's going to be around the case, but you get a short-term top that goes down a few days and goes right back up, makes a double top. And that may happen here. So we may see a pullback down to 55. I got support on GDX. This is the GDX right here. And we had a sign of strength through the previous highs of this trading range right here. And so I'm thinking around 54 is actually where that previous highs were. And we had a sign of strength through it. A lot of times you'll find support at that strength. So I am actually got short a little bit too quick. Didn't get the highs or anything. I'm short around 55, but I'm probably going to cover around 54. So not a great trade, but things just zinged up too fast here. But
Tim, can I just ask you, are you talking about the high that was made on the 8th at 58.81, and we're now, and then 3 days later, that was yesterday, on the 13th, it went to 58.77? That's a little double top you're talking about?
No, I'm thinking this 58 area is going to come back down to 55 and go back up to 58 again. That's what I was thinking.
Got it.
That may change. I don't know, but just the only reason why I'm bringing that up, because a lot of times that happened in the past, similar shit like that. So we'll see how that works out. But I'm going to cover the short on the pullback. So here's another range. I think it could be a double top. This is the monthly XAU going back to, well, there's 1988, so it'd be 87. And I marked all the times when the RSI got above 70. We're at 75.63 right now. So the market's extended. But if you also notice, XAU is testing the previous highs of 2010, 2011. So it's running into that high with the RSI over 70. Excuse me. So we got quite a bit of resistance here. We'll lead through it. Yeah, I think it will. But this is summer again. I keep talking about that. This is normally you get rallies into the summer periods, then you get these consolidations, and I think the gold market is up for consolidation too, along with the equity market. I think this consolidation could last a while, possibly September, October. So I'm no hurry to get long. I think gold stocks, this is not the final high, but I do think we'll have a timeout in this uptrend here, just because of the XAU, RSI, because really, last time we got this high was the COVID high. That was
Yes.
March 2020, and you consolidated actually a couple of years. So the RSI is in this period you get up there every year, well, every 2 years, 2004, 2006, or 2004, 2006, 2008. So it does suggest a consolidation, but it's pretty rare to get the RSI up there. We're up there now, so I'm kind of treading lightly. I think that the big ones are going to consolidate. The smaller ones, gold stocks and silver stocks, are just starting to turn up on the monthly chart. So I think of the places to be is probably not to be in the majors right now. I'm kind of saying that for long, and a lot of these have really huge run-ups on the AEM and Newmont Mining. If you look at their monthly RSIs on those, they're all up around the 70, or have got up in the 70 range, and are now starting to correct. And so I think that correction on those big issues may last several weeks, if not longer. So here's a shorter term view. This is GDX on a daily. So you looked at the monthly, we looked at the weekly. This is what the dailies are doing. And this is it's kind of hard, but this is a GDX up-down volume with a 10-day average. And all I did was just, when it got around 50, that's all this indicator is. I didn't mark this one right here, but that probably picked out that high right there, and this one here picked out this high right here. But anyhow, I marked the ones going back until last August, so about a year back, and all of them marked consolidations. So this one, it happened, counting these 2 times, 11 times, and all those times, 11 out of 11, I'll put it that way, marked a consolidation. So all of them went down for looks like a couple of weeks or so. But do I expect that to be the case? Yeah. So I'm thinking we're going to pull back down to around 54. That's the reason why I brought this chart up. So it's the weeklies and monthlies, and the dailies are all kind of extended here. So just to be a little bit careful. But it's not a major top of any consequence. I can show some longer term indicators, but I'm kind of just looking at the short term. So I'm thinking through October, we'll probably do something like this one right here. A couple 3 weeks, maybe longer. I don't think of any major consequence, just to 54. So, we got any questions or anything, or?
So, just within that context, so some of the very small gold, especially the silver stocks, for instance, we still have the core mining, and every time I'm expecting a little bit of a pullback, it just keeps going higher, and it's just shot up. We're in from under 8, and here it is, hit almost 12 today, and it looks extended, but somehow or other. It looks like it's their turn to have their moment in the sun, because they're holding pretty well, the little ones. And you mentioned AEM, which is AEM is Anglo Eagle, and it's done extremely well. But also looks just on the daily chart, it looks like it's made this peak D, and it should just have a digestive phase. But it's amazing how gold and silver have found this year has been quite remarkable. Just a real nice breakout here, and you've pinpointed that really well. Congratulations.
Yeah, well, thanks. But yeah, they're extended, So on the, we looked at all the daily, the weekly, and the monthly time frames here, and at some point they're all kind of extended. So just consolidation. I think the small ones are the ones to be in. The big ones, I'd take profits and throw it in the smaller ones is how I'm doing it. So I think this run is still in the early stages. I still think we'll run into 2000. I think 27. I got a cycle analysis. So, but we'll have a consolidations along the way, and this is the beginning of one. So,
well, that's great. So, Tim, I must thank you. You always provide such tremendous information. That's really great. And folks, check out Tim's newsletter. And I really have to thank you for being here. And thanks for all that information.
All right. We'll talk to you next
See you on Tuesday. Yes, thank you.
All right.